So good evening, everybody. You're welcome to today's end of day review for the 1st of August 2024. We thank God for a new month. It hasn't been easy. Some people didn't cross over into this new month with us. Somebody comes to mind, the late Onyeka Owenu. She passed on this morning. So she's no longer with us. So we give thanks to our individual maker, whichever faith you have, for seeing us to another month. And we pray that this month will be a peaceful month for every one of us, because Christmas is 4 months away. So this is being brought to you by Trading Pro. Trading Pro is an international multi-award winning financial service provider. They offer services that make it possible for you to trade on the Forex market and the CDF market as well. They offer a lot of services, and one of them is this service, which is engineered to encourage traders in developing their knowledge and abilities. They also offer various account types. So you can go to the website, this website. They're offering 8 years anniversary. So you can sign up for it, 10 plus 10, winning this easy step. So you go up there, Trading Pro Nigeria, tradingpro.com, not Nigeria, and join the contest. Who knows, you might win something interesting. So without taking so much of our time, let's get down to what we have for tomorrow. We're starting off with the economic calendar. The FOMC has come and gone. The Fed kept rates at 5.5. So what they'll be watching is on Friday. Friday is going to be fireworks, serious fireworks, because this will determine a lot. Because during the FOMC, during the Fed chairman's talk, they kept making reference to the job earnings. So that will be a major decisive factor. So, but for tomorrow being Thursday, the British pound, Bank of England, the rate policy is coming out tomorrow. The Bank of the European Union, they cut interest rates. So we don't know what the Bank of England is going to do. Maybe they might also cut. If they cut, that will be negative for the pound. Then after that, we have 130 unemployment claims. That's going to be the major news. The ISM manufacturing is important, but not as important as that at 130. So that's what we have tomorrow. Pound rate news and the unemployment claims at 130. So that's out of the way. Let's get down into our pairs. We're going to start off with the EURGBP, US 100, dollar index, Euro USD, GBPUSD, gold, pound yen, and euro yen. So being today the last day of the month, we'll be looking at the monthly candle to see how it's going to close. So looking at gold, the way gold is now, this is almost a very bullish monthly candle. But if you notice, it's having a bit of a challenge closing above 24.50. So you might see a retracement. But going into August, we might be looking at bullish gold. We might be looking at bullish gold. So that's out of the way. Let's look at what we have on the daily. So the daily has closed bullish into this fair value gap here. So tomorrow we might see a bit of a retracement, because when you have a bullish candle that on the daily, when you have a bullish close, you'll be looking to buy below the open price. Like here, this is a bullish candle. You see the way price opened and came down. So if you're looking to buy, you'll be looking to buy as price is moving down. This is what they call the Judas swing, the false move. And after that, what happened is going to continue. But since this is at an interesting level, you have this 24.50 and this inverted fair value gap. What do you mean by inverted? Now, let me explain. You have this point, you have this point. If you look at this fair value gap from here to here, there's one pass, and then there's a movement here. There's a movement here. So this low also rhymes with this level here, this area here. So from this point to this point is what you call inverted fair value gap. That's one candle pass, and you can see that's where price is now at the moment. So that means that tomorrow we might see a bit of a retracement before a continuation to the upside. So going into tomorrow, gold is bullish. Any retracement on it is going to be for an opportunity for longs. I'll be on the same page. Any down move, you'll be waiting for any of the fair value gaps to hold and for price to continue to the upside. So we have an inverted fair value gap here. So you'll be watching this area. It's an inverted fair value gap. Let me see. Inverted fair value gap. Sorry. I started off with gold. I'm supposed to start off with EURGBP. Let me go back. Let me start off with the EURGBP. So we have an inverted fair value gap here. So let me just start off with the way it's supposed to be. So start off with EURGBP. Looking at EURGBP, if we start off on the monthly, we seem to have a bearish move, but price didn't close below these two levels here. And you can see price is still moving back up. This is bearish, but it points to the fact that going into August, we might see a bit of a move to the upside before a continuation to the downside. So if we look at the euro, because this is going to be very important for tomorrow's trading, because that bank rate, the Bank of England's rate statement has a major impact on the EURGBP, which also has a major impact on other euro and pound crosses. So looking at this now, this is showing a little bit of weakness because we have a long upper week on the daily. But that does not mean this might continue to go down. So, because if the rate news doesn't come out positive for pound, this is going to move to the upside. If it comes out positive for pound, this is going to drop. So we can't say for now, but looking at this has a bearish bias. So if we go to the 4-hour time frame, what do we have on the 4-hour time frame? We're still looking slightly bearish. So we're looking at this low, 84.07. If this low is left intact, then that means price might go on for 84.48 before 84.60 tomorrow. But if they break and close below this low, then we might any retracement into this pair will be for a move to the downside. So for the euro pound, we're still slightly bearish to neutral on this pair. The next we're going to be looking at is the US 100. That's NASDAQ. NASDAQ, let's look at it on the monthly. See, the monthly has a doji, which is an indecision. But if you notice, it seems that price came to retest this area it has broken out of. So with that, let's go down to the daily time frame. Daily, we have a bullish engulfing into a daily fair value gap. And if you look at this, price is at the consequent encroachment of this fair value gap. If I'm to put this here, price is at the consequent encroachment. Just like I said, that's where price is. You don't want to sell here. You don't want to buy here. So what we are going to be waiting for tomorrow is a bit of a retracement. When you get that retracement, you'll be looking for a bullish move because on the 4-hour, we have a bullish breakout on this pair. We have this low, we have this high, this. So we might see a bit of a retracement tomorrow for a continuation to the upside. And if this pair is going to continue, you'll be watching this box here. So you'll be watching it to come into 19,700. But that depends on tomorrow's outlook. So for now, you wait for a retracement and bullish evidence to continue long. The next way is the dollar index. The dollar index going into August, the way this dollar index is closing on the monthly has reasons for concern. This is a 3-candle pattern on the monthly. This is a 3-candle pattern on the monthly. This is a bearish dark cloud pattern. There was a rejection. Now you have a bearish engulfing on the monthly chart. That is not good. It is not good. And this is a 3-candle pattern. It's just like something, it's a 3-candle pattern, bullish, bearish. No, bearish, bullish, bearish. And if you notice, a candle still has some few hours to close. If this daily monthly candle doesn't close below this closes below this previous month, then it's going to be very bearish in August. But as it is now, we might just see a retracement into this previous month and a continuation to the downside. Technically speaking, all things being equal, that's what is going to be expected, because whenever you look at this type of pattern, if you check it on your chart, it's normally a continuation. So the dollar index is pointing to possible bearish moves going into August. So if we look at where price is now, we have a bearish swing in play. So you don't want to take a long here. So tomorrow, the possibility is that we might see a bit of a bullish retracement and a continuation to the downside. That's what we might see tomorrow. A little bit, because these are another block here. So you see price is there. So you'll be watching this 1 hour fair value gap to reject price and probably see price sweep this low and into this level here at 103.88. That 103.88 is coming from this low here. Because you see, there's a false break to the downside. So if price comes back there, gets rejected, we might see a continuation back upwards. Tomorrow, you'll be watching for a retracement into here, rejection, and a move lower as price is within this other block on the 1 hour time frame. The next way we're going to be looking at is the EURUSD. So looking at the EURUSD, let's look at it from the monthly to see how the monthly candle is setting up. Look at it from the monthly. If we look at this pair from the monthly, we can see that it has the inverse of the dollar index. But instead of having a close near its low, it's having a close way down here. So this is bullish, but we might see a deeper retracement on the euro before a continuation to the upside. So if this, put this aside now and go to what we have on the 4-hour time frame. So on the 4-hour time frame, we have this candle pattern is what you call a bullish dark, a bullish piercing pattern. A bullish piercing pattern. So tomorrow we might see a retracement to the downside before a continuation to the upside. Now this long upper wick is not good. This long upper wick doesn't point well. So that means that going into tomorrow, they might be factoring in weakness. So we might see a bit of a retracement before a continuation to the upside on this pair. Because this pair had a breakout, but it was a deep move down. Let's go to the 1 hour. It might be clearer on the 1 hour time frame. So we had this high, this low, the break above, and the deep retracement. So this might just retrace a bit down before continuing to the upside, but you just need to be careful because we still have non-farm payroll on Friday, and that is going to be a major driver. So the next pair is the pound GBPUSD. Looking at the GBPUSD, the GBPUSD seems to have the same setup as the pound, as the GU long upper wick. So what that means is that we might see a bit of a retracement, because there's a little bit, I'm a little bit surprised, because if the dollar index is closing near its lows, these are supposed to close near their highs. So that means that we might see a bit of a retracement on this pairs before a continuation to the upside. So let's go to the 4-hour time frame and see what we have there. Let's start from the daily. How is the daily closing? The daily candle might be closing bullish. Yes, just like I said, this is a proper what you call bullish PSM pattern. So that means that tomorrow we might see any move down on this pair. Now, this is a beautiful pattern. This is a beautiful 3-candle pattern. This is bullish. So that means that we might see a retracement and a continuation on this pair to the upside, probably to 28.74, 28.85, and then all these highs here tomorrow. Remember, we have rate news coming up on this pair tomorrow. So the next pair we're going to be looking at is gold. So far, I've done a little bit explaining on gold. So gold is bullish, but where it is, it's not often that you see a daily fair value gap lining up at the same point with a 4-hour fair value gap. So this might cause a little bit of a retracement. If that retracement is going to happen, you'll be watching. Let me remove all this. You'll be watching this area here, from here to here. That's between 24.39 to 24.39 to 24.29. Why? Because this is a fair value gap here. One candle down, one candle up. You can see it's equal, almost filling it up. So if price is going to come down from here, you'll be watching this area here. So that's why price might retrace to the first place is 24. Oh, sorry. Move it. The first level is 24.39. So if we do go down to the 1-hour time frame, you'll be watching for a move down, probably, and it lines up with this area. That level lines up with the 50%. This is the equilibrium of this 4-hour fair value gap, slightly above it. So most likely it might be a draw for price before a continuation to the upside. As if you look at this pair on the daily, it has a bullish close. So like I said, when you have a bullish close, you wait for the move in the opposite direction before a continuation to the upside. So we have a bullish gold tomorrow. The next pair we're going to be having is pound yen. This pair for now is still bearish. Let's look at how it's closing on the monthly time frame. Wow. Now this is a heavy bearish move on the monthly. So this monthly would not prefer it to go down first. If it's to continue down, we'll prefer price to retrace up a bit. As you can see, prices are this daily fair value gap. We'll prefer a retracement first. Go down to the 4-hour time frame. A retracement probably to fill up this 4-hour fair value gap and move back down. That is if the 4-hour fair value gap does not reject price. But if it rejects, if it price breaks it, then we might see a higher move before a continuation to the downside. So what is going to tell you that is about to take place once you get a 1-hour close above 194. Once you get a 1-hour close above 194, then you'll be looking at something like this, retracement and a counter move up. So that's it for the euro pound. The next pair and last pair is the euro yen. Looking at the euro yen, it should have the same. Let's look at it from the monthly. Now, this is a solid bearish candle on the monthly. There's just one candle on the monthly. But it doesn't mean that it might sell throughout, like we had something similar to it here and price just went up. So this might just be another cool off before another massive run to the upside. So we can't say tomorrow, but this is the second week down. Order flow on this pair is still bullish. So what we are looking at now is probably a retracement that is in play. So we'll be watching this low. There's no close below this low yet. Liquidity below it has been swept. So that means that tomorrow we might see solid move to the upside. And remember, we have this order block here. So you can see it has supported price. And we might see a bullish run tomorrow. Let's go to the 1-hour time frame. We might see a bullish run tomorrow. So what is going to tell you that is about to take place is a close above 163.44. So once we get a close above 163.44, then the bullish retracement might continue. Any questions? Any questions before we call it tonight?
No card. Please white, please. USD card.
USD daily. This is bearish. This is bearish. We might see a bit of a retracement. We might see a bit of a retrace. Let me look at it on the monthly. Let me be sure what the monthly is saying. Wow. Now the monthly is bullish. The monthly is bullish. You're going to see a bit of a retracement. How low will it go? I can't say. But you see the way the daily is points that you might see a bit of a retracement down before a continuation to the upside. Let's look at the 4-hour. The 4-hour is not telling us much. Go down to the 1-hour. Well, we might see a bit of a retracement. You're watching this fair value gaps before a continuation back downside. So with that out of the way, I wish everybody a blessed and lovely night's sleep and a beautiful new month ahead. So good night, everybody, and thank you for attending.